Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon, I'm Ira Duggal. Let's get you the headlines. Indian markets remain in negative zone as investors await for cues from the monetary policy tomorrow.
Central bank should stick to its inflation targeting regime and not get swayed by calls of a rate cut, says former Governor of the Reserve Bank of India, Rajan.
Ahead of the monetary policy review, India's services PMI contracts for the first time in 3 months as new business orders drop.
Biocon hits an all-time high after the US pharma watchdog gives its nod for a cancer drug jointly manufactured with Mylan.
All right, but let's start the show as always by taking a look at the markets. About 0.1% lower on the Sensex. Neeraj is here with us. Afternoon, Neeraj.
Hey, afternoon. So, the markets are queasy when ETFs and gold ETFs tend to hit the charts of the fresh 52-week highs as opposed to stocks. So all through the last few days, I've been seeing some names or the other. Now that's not happening. But slightly off in today's session as well. But the mid-cap and the small-cap space as well, as we all know now, and I'm not saying anything new, but the carnage continues. The small-cap space, guys, is down 20% YTD. Now, if that is not a serious correction, then tell me what is. In today's session as well, almost all of those lead indicators are down and out. I mean, forget what's happening on the index. Reliance Industries may be doing okay. Certain pharma names, certain IT names may be doing okay. But that notwithstanding, look at the broader end of the spectrum and peppered with losses to the real estate names, for example, today. So turn by turn, a pocket is taken out and punished almost every single day. Yesterday and today, of course, aside, Oberoi Realty is notwithstanding, look at HDILs and the rest of the gang, all of them are down and out in the session today. And everybody was talking about how the stocks in the additional surveillance measure list are getting punished, right? Now, the volumes on these stocks, Harsha and Ida, are abysmal, like 20,000 shares. But look at HEG, Graphite, etc., etc., etc. The volumes are not that high. It's just that they are getting sold, and these are companies which were until a month ago being loved by investors because the earnings were reported as very strong, and they still are, of course, and the management commentary about FY19 was very strong, so nothing's wrong fundamentally, but technical triggers leading to a really big sell-off in a clutch of these broader market names. But when the mid-caps are down 15% and small caps are down 20% in a year, something's amiss. I mean, you can argue that the Nifty and the headline is still at 10,600, but a lot of pain. Speak to any portfolio manager right now, and they're saying that, irrespective of what we tweet or what we write about market wisdom, all of us are under pain right now.
All right, Neeraj, thanks so much for that. That's good insights into the markets. On the macro front, conflicting indicators continuing. Services activity in India contracted for the first time in 3 months in May. The Nikkei India Services PMI fell to 49.6 last month from 51.4 in April. A reading below 50 indicates contraction, while a number above it signals expansion. Services activity in the country fell below the 50-point mark for the first time since February, when the index stood at 47.8. This is largely being attributed to a broad stagnation in new business orders. Employment growth also slowed to its weakest pace since about December.
An emerging market sell-off that's hit India hard presents RBI with a choice. Hold interest rates steady to boost growth, or follow the example of what's happened in Indonesia and Philippines and hike interest rates. Anirban Nag of Bloomberg News joins us with what's a catch-22 situation before the Monetary Policy Committee.
It indeed is, Harsha. You look at it from Indonesia and Philippines, Malaysia, they've all raised rates. So there is pressure on the Reserve Bank of India, given the amount of outflows that are happening, to raise rates. Of course, if you look at the inflation background, it justifies a rate high. But again, if you look at the growth, the factors, it's a little nascent stage. You've got the services sector out today. Growth is a little uneven. So I think it's going to be a very close call, the RBI rate decision.
What is the market pricing in?
Well, the market is pricing in a 25 basis point rate hike. Now, supposing if that doesn't happen, of course, we will see that the rupee will come under pressure. Bond investors, of course, are going to get nervous. Foreigners also will get very nervous.
All right, Anirban, thanks so much for that. The macro global backdrop as relevant as the domestic backdrop. Interestingly, RBI Governor Urjit Patel wrote an op-ed in the Financial Times a day ago, and he talked about the global factors that are going to actually play on emerging markets, talking about the global spillovers. The quotes will come up on your screen. I'm just making the key points that he talked about. He said that global spillovers, which had not so far manifested, have come to the fore over the last few months or so. According according to Patel, a large part of this has to do with the fact that the Fed continues to contract its balance sheet, or rather slow the pace, wind down its balance sheet at a time when the US's fiscal deficit is widening and the US government is borrowing a lot more from the market. So this, he says, means that a lot of the incremental dollar funding will go to US treasuries, leaving a hole in terms of dollar funding for sovereigns in the emerging markets. All of that, he thinks, could have a bearing on emerging markets. What is his suggestion? Well, he wants the US Federal Reserve to actually calibrate or recalibrate its balance sheet wind down process, keeping in mind the implications of this for the broader global economy, the emerging market space, and also what he called could lead to a sudden stop for the global economic recovery. That is Urjit Patel in the Financial Times.
All right. Meanwhile, former RBI Governor Raghuram Rajan believes that the US Federal Reserve is focused on domestic economy and will hike rates 3 times this year. Speaking to Bloomberg's Haslinda Amin, Rajan, who introduced the inflation targeting framework in India, says it's crucial for the RBI to stick to its roadmap and improve credibility. Listen in to a slice of that conversation.
When you talk about the Fed unlikely to step off, are you looking at what, 2, 3 more rate hikes this year?
I think probably 3. I think the next one, June, seems to be baked in. My guess is unless something really untoward happens in the global economy or in the U.S. economy, which in the U.S. certainly there's no sign that something bad is going to happen, that we will have a couple more rate hikes, after which the Fed will look around and see, well, are we getting close? So around 2.753 is approximately where it will stop, maybe one more next year, and perhaps pause at that point and say we're closer to neutral than we were, and maybe we have to see the consequences because monetary policy has lags.
But we've seen a rout recently in emerging markets, and your successor, Urjit Patel, has come out to say that, the tapering pace of the Fed is to blame for what we've seen recently. Do you agree with that view?
Well, I don't know that, the liquidity in the financial markets has disappeared as of now. I think Dr. Patel is raising a question about going forward if there is a substantial withdrawal of liquidity, whether in fact it causes markets to tighten overly. But my guess at this point is the U.S. is focused on the growth of the domestic economy and thinks that inflation is pretty much where it wants it to be, and with labor markets at below what it thinks is consistent with full employment, that is at 3.7, this is a historic low, that really they're focused inwardly, and unless there's something big outside that happens to knock their sense of what is going to happen in the U.S., they're going to continue.
But having said that, should the Fed at least take cognizance of the rout that we saw in emerging markets?
Well,
bear that in mind.
I think that in a world where countries take full cognizance of the international responsibilities, one of the things that I have been pressing for is really the sense that the big central banks should look at the consequences of their actions also on other countries. That said, I think emerging markets are in a much better situation today, with a few exceptions where finances as well as politics are creating some uncertainty amongst international investors. But I think broadly they're in a much better situation than they were, say, around the time of the taper tantrum. That is not to say accidents cannot happen.
That's agreeing with the view of Jerome Powell, who said that emerging markets are in a good position to navigate the shifts in U.S. policy. When you talk about there are exceptions, which countries?
Well, first, I would say they're in a better position. I think there will be still stress for the emerging markets, and they will have to cope with a rising dollar as well as rising international interest rates, as well as the flow back of capital flows, which always happens at times like this. So there will be stresses. Of course, if you look around the world and you ask which countries are already stressed, you would say Argentina is stressed, and of course Turkey is undergoing some stress. The central bank has raised interest rates considerably, as well as simplified the interest rate structure. But I think in countries looking forward, of course Italy, depending on what the government does and how much it wants to break the fiscal constraints that the union puts on it and the euro area puts, that's going to be a place to watch. watch Brazil, where elections are coming up. And of course, Brazil has a medium-term fiscal problem, which it needs to resolve by dealing primarily with the pensions of public sector employees. That is going to face the next president. It's not going to happen before, but it's going to be something the next president will have to opine on very quickly. And that's something to watch out for. So there are countries that have issues that they have to deal with as we go forward.
You didn't mention any of the emerging markets in Asia.
Well, I think Asian emerging markets are in a healthier situation than in the past because of fairly narrow current account deficits, fairly small fiscal deficits, as well as moderate inflation. So there is more confidence in their currencies. Many of them have moved to inflation targeting regimes, and there is a sense that they're not going to let inflation get out of control. So they are in a different position. Again, I would say that some of them can get stressed. At this point, I would say, amongst the big ones, no clear and present danger.
You talked about Italy, and we saw the fallout from Italy throughout the world. 2 months ago, IMF chief Christine Lagarde did say that she was confident the Eurozone was on a sustainable path of growth. Does Italy change the prospects for Eurozone?
Well, I think certainly the advent of a populist government in Italy will raise the questions that have been raised and have quietened down, which is, what is the periphery getting? Now, in truth, the periphery has got a lot in terms of inheriting a credible monetary policy, much lower interest rates than they were used to. But at this point, in a relative sense, when they look at the past, they feel that the exchange rate is stronger than they would like, and the benefits of low interest rates are being subverted to some extent by fears about these countries, and the spreads are widening. So on the one hand, we don't have as flexible an exchange rate as we would want. On the other hand, interest rates are higher for us than we would like relative to what they were in the past. And so our firms are paying these higher interest rates, are not being able to match competition from, say, Germany or the Netherlands. And so the core periphery sort of divide is growing again. Now, I mean, there is a dialogue to be had, but it is going to be a tough one.
Italy is one challenge. The other challenge is trade. U.S. and NAFTA, U.S. and China, and of course U.S. and its U.S. Steel and aluminum tariffs. Is Asia most at risk when it comes to concern of protectionism?
Well, unfortunately, accidents can happen. And the world is not well prepared for the entity at the center of the global financial and monetary order and trade order turning around and saying, I don't believe in all this, I want to change things. Now, the system has been built by the U.S. around the U.S. And now the U.S. actually doesn't believe in using the multilateral system. This is a very big change, and we're not prepared for it. Now, you would hope that good sense prevails, that some of what we see are bargaining tactics rather than actual threats which should be carried out. The problem, of course, is positions harden. You make a threat, somebody else makes a counter threat, soon you find you cannot back off. And then we get into, this is true of war, it's true of trade war. And one of the big worries is that threats are being made left, right, and center by sort of strong, I would say largely men, strong men who want to be seen as strong. And the room to back off is far more limited. And every country, whether democratic or authoritarian, essentially the governments want to look strong. So my worry is what you may think of as bargaining ploys, working out the art of the deal, soon becomes hardened positions which become very difficult to back off. And then you enter actual conflagration. And that, combined with the high degree of leverage and asset prices which are priced to perfection, that's a potent volatile combination.
So Rajan, let's speak on inflation in India. There are signs that it is rising. It remains a big issue.
Well, inflation is always an issue, right? That especially since India has entered the inflation targeting regime relatively recently, and has to establish credibility over time that it is controlling inflation. Thus far, I think it has. And yes, there are ups and downs, there are pressures and so on, but the regime is working as advertised.
The market has factored in a 25 basis point cut. Others say that won't be enough. Your thoughts on what needs doing?
Well, I've stayed away so far from commenting on monetary policy. I think I'll continue doing that.
The banking sector is also under a lot of stress given the recent scandals. Have we seen the end of it?
After scandals, who knows? I mean, I hope so. The key issue for India today is to get the public sector banks lending again. And to get them to lend again, I mean, clearly capital, the government has provided capital, but what is also needed are two very important things. A focus on enhancing the capability of public sector banks to do risk assessments, credit evaluations, and lend. And second, a sense of confidence amongst the managers in public sector banks that they will be evaluated on a commercial basis and not held up for, every time there are losses for perhaps acting beyond their remit. And I think this needs confidence building on the part of the owners of the public sector banks, which is the government, to assure them that they can lend and they will not, if they lend with good intent, it will not be held against them. Lending is always risky. Losses happen. And they have to have more confidence that that will be the case. Until that happens, I think we've seen some ebbing of credit from the public sector banks, and I don't see that reviving except for small ticket loans to the retail until that confidence can be built up.
You talk about optimism. The State Bank of India has come out to say that, perhaps they're now in a happy or perhaps happier place because we're seeing probably the end of the worst of the bad debt situation. Your take on that?
Well, I think recognition has been quite good. There may be some more to recognize, but it's going to be relatively small compared to what has been recognized. I think what is important at this point is the resolution process, which they're working through. Some of the big ticket items have been appealed in the various courts. When they come back and there's actual resolution, you will see some capital flow back into the banking system because they've provided more than some of the final resolution value of some of these loans, and therefore some capital will flow back. I think that will be positive for the banks. It is important that this resolution process be worked in an effective way such that the public also recognizes it's a fair process. And for that, it's quite important that some of these big promoters don't actually recapture their assets at bargain basement prices. And I think what the government has done in passing an ordinance to try and prevent that is important. We must make sure that follows.
Dr. Rajan, just one final question very quickly. I mean, your name has come up as a potential replacement for Mark Carney as BOE governor. Might you be interested in that?
Well, I've said repeatedly, I'm very happy in my current job. It's full of challenges,
You've been approached?
full of fascination. No comment on that, but I'm perfectly happy where I am.
All right, let's move on to the Indian market regulator. SEBI has eased the delisting process for acquirers of insolvent companies, but SEBI has also laid down some conditions for these new norms to apply. Payaswini Upadhyay is here with us to take us through the details. Afternoon, Payaswini.
Well, to begin with, obviously it's a welcome relief. One that, insolvent companies and the potential bidders were, if I can use that word, lobbying for very long, and they were saying that the same exemption applied in the SICA regime. So why are, you're not, you the regulator, easing the delisting norms for companies under the IBC. So what has SEBI essentially said is that its delisting regulations will not apply if one of these two conditions are met. One is that the resolution plan should explicitly mention that the incoming investor intends to delist the company, and the second condition is that the exit price or the exit option to the existing public shareholders should be provided for. SEBI has also mandated mandated? What is the minimum floor price for this exit? They have said that the exit price cannot be below the liquidation value of the corporate debtor minus all the dues that the corporate debtor needs to pay. Now, the insolvency code provides for a waterfall. So essentially, the math will look something like this. Let's say the liquidation value of the corporate debtor is 100 rupees. And the corporate debtor owes, let's say, put together to the financial creditors, to operational creditors, to workmen, statutory dues, all of this put together is 50 rupees. So 100 minus 50, whatever the remaining balance is, that will be the value that will be considered for the payouts to public shareholders. A caveat that SEBI has provided here is that if the existing promoter shareholders or any other shareholders is given an exit at a price which is higher than this price, then the public shareholders need to be given an exit at that price. This is to basically safeguard the interests of minority shareholders, that if promoter shareholders are being given an exit at a price which is higher, then those minority shareholders also need to be given that price. If I can add, there is also a change in terms of, or rather clarification that has come in under the takeover code. So a lot of these acquirers or existing shareholders, when they're converting their debt to equity under some of these resolution plans, they're exceeding the public shareholder norms, which is 75%. So SEBI has essentially said is that if a resolution plan is approved and it envisages to existing shareholders anything more than 75%, that is allowed, but the limit will need to be adhered to within 12 months. So if you acquire more than 75% today, in the next 12 months, those existing shareholders will need to bring back their shareholding to 75%.
All right, Sunny, thank you so much for putting that in perspective. The US drug regulator, meanwhile, has approved Biocon, Mylan's new biosimilar. The drug helps reduce the risk of infection for cancer patients. Darshan is standing by to tell us why this is a big boost for Biocon. Darshan.
Yeah, so there are two positives that's come out of this drug. So firstly, this is a drug that is jointly developed by Mylan and Biocon. The front end will be developed by Mylan, so they will be selling it. Biocon will be the manufacturer. So in terms of how the deal works is that it's morely on a profit sharing ratio. The more drugs that Mylan sells, the more the revenue Biocon gets, because the drug will be supplied from them, and they will also have a profit sharing. And in terms of the margins, it's a high margin product. So it's a first mover advantage. It's the only biosimilar there in the market. It's a big $4 billion market. So that is where it becomes positive for them. And because of they have first mover advantage, the price erosion won't be very, very, very high, and they will be able to garner market share. So that's what on the financial point first. So most of the brokerages have indicated that it's a good opportunity for Biocon. Secondly, this has been filed from the Bangalore plant. So what this means is that, all the concerns regarding the Bangalore plants, 748 Form 483 observations now are addressed, because they've gotten the approval from this plant. So overall, extremely positive news for Biocon. Now it depends how they manage to scale it up and ramp it up. And Mylan has said that they expect the launch to happen in the next few weeks. So that's what we are watching out for. But let's hear out what Kiran Mazumdar-Shaw had to say on the approval.
Pegfilgrastim has an imminent opportunity to get into the marketplace. And I think this is a huge milestone again for Biocon, as you very rightly put it, because this is now the second biosimilar that has got approval from US FDA. And as you know that in both cases, we are the first biosimilar in its category to be approved. So it was first biosimilar trastuzumab and now the biosimilar Neulasta. And as you know, many companies who have actually been working on the similar molecules have still not crossed the finishing line. So it tells you how complex these drugs are to develop, and it also reflects the competence and capabilities that we have at Biocon.
Ma'am, what's the expected timeline for launch? Mylan has said that it will happen in the coming weeks. What's the view at your end?
Yeah, so I think, as we said, it is imminent, and, we will be prepared for imminent launch, and we will be getting ready for how soon we can get it into the market.
Can you give us the financial agreement that is there between you and Mylan for this drug? How much percent of the revenues or how much percent of the profits that you will be getting, and what kind of margins you will be making on this drug?
As you know, from a revenue point of view, it is going to be Mylan will really book the top line revenues. Biocon will basically be getting a profit share, and the only revenues we can book is the supply of product to Mylan.
Any idea on what EBITDA margins will be you be working on this drug?
Well, obviously, you can imagine that these EBITDAs are very attractive and very lucrative, and that is why we've been investing so much in biosimilars, because we believe that these are very attractive drugs to develop. And, certainly for the foreseeable future, I think biosimilars will see very low levels of competition, and therefore we believe that we will be able to have very rich EBITDAs.
Unilever has decided to merge its food and refreshment verticals in India. The move is in keeping with the FMCG giant's global structure, which they claim will unlock future growth and higher margins for the company. Charlene D'Souza joins us with the details now. Charlene, what does this mean?
Yeah, so the country's largest FMCG player has announced the merger of its food and refreshments business in South Asia and also in India, and it's expected to be effective from July 1. This is to keep aligned with its global structure. Now, globally, after it sold its spreads business last year, the maker of North Soaps had announced the merger of these two segments, and it had then said that this was done to unlock future growth and for further margin progression. Now, in July 2016, HUL had split the reporting of these two segments and also changed the reporting of other segments into soaps and detergents and also into home care. Now, Sudhir Satapathy, the executive director of the refreshment segment, will now be the executive director of the foods and the refreshment segment. Now, Geetu Verma, who's currently the executive director of foods in India, will move to a global role. She'll be the global vice president for nutrition and natural platforms for Unilever. Now, the food segment in FY18 reported a revenue of 1,165 crores, while the refreshment segment reported a revenue of rupees 5,225 crores.
Charlene, thank you for that. That's Unilever. May 2015 had come as a rude shock to Nestle and for Maggi lovers alike. The instant noodles, which had been long considered the ideal quick fix meal for many, was banned by the food regulator. This after labs found iron content, which was above the permissible limits. Nestle got into damage control mode, flew in Suresh Narayan from the HR division to manage the situation. And 3 years later, life seems to have returned to normal. Agam standing by to tell us, take us through Nestle's rather eventful journey over the last 3 years.
Well, life may have actually become better for Nestle after the Maggi crisis. Let me just start off with the way Nestle has performed with respect to the FMCG index before and after the crisis. So as you can see here, while Nestle 3 years before the Maggi crisis had actually underperformed the Nifty FMCG index, we saw about 66% growth for Nestle, but the index moved up around 88%. It was the same for the time when that was the period of May 2015 to around February 2016. We saw Nestle correct by as much as 50%. As against 16% for the Nifty FMCG index, and after that is a time where Nestle has clearly outperformed that index, nearly doubling, whereas 60% growth for the FMCG index. Now, in terms of growth too, and this is what explains the reason why we have seen those movements between the period of 2012 to 2015, we saw the revenues decline on a CAGR basis for Nestle, and well, profits declined by as much as 19%. Of course, during that calendar year when we did have the Maggi crisis come through, we saw a decline of 17% in revenues against 52% decline in profits. And since things have improved quite substantially for Nestle, with a 12% growth on top line and a 48% growth on the bottom line on a CAGR basis, albeit on a low base. How have things changed when it comes to the different segments and the contribution? As you can see here, before the Maggi crisis, we saw about 29% of its revenues coming in from prepared dishes. And by prepared dishes, it is essentially the Maggi portfolio. Around the Maggi crisis, that contracted to nearly half at around 15.5%. And since then, it has moved up to around 27%. However, it's still not back to the pre-crisis levels. But this is also because the company itself is looking to expand its other portfolios, and that's the reason why we're looking at this. And of course, that said, we are looking at substantial increase when it comes to the operational levels.
What's really working and what's the way ahead, Agam?
Right, so I'm going to start off with what's working for Nestle and what really has been, a part of this improvement in plans is the distributions. And because of the fact that they've taken up the cluster model in distribution, that is working out in favor of Nestle. But more importantly, perhaps, it's the new launches and upgrades. The management has spoken constantly about innovating the products, presenting the products in a different way, and that is something that has also been working out. Let's not forget, Nestle has had that advantage playing out when it comes to milk and sugar prices. In fact, one of the only companies, perhaps, in the FMCG basket to show a decline in raw materials costs for the fourth quarter gone by. And among many other advantages, of course, we've also seen lower taxes on account of GST come through, just like for many other FMCG companies too. Let's not forget, Nestle is foraying into the breakfast cereals market, and this is a market which is relatively unexplored. The only other big player here is Kellogg's. So, well, it does see a lot of scope, and that's perhaps the reason why a lot of analysts are also very bullish on Nestle. That said, there will be some challenges coming in as well. So we do know that near half of its revenues comes from the dairy segment, but there are plenty of homegrown dairy players offering similar products at a reasonable prices, and that's the reason why it may have a little bit of a disadvantage playing out when it comes to pricing. That said, in the coffee segment, again, the same thing. It's moving and catering to a premium segment, and for it to move into the mass segment, it may have to take a hit when it comes to pricing. And because of the fact that the management is focusing on growth, this means that they may have to sacrifice margins according to a lot of analysts on the street, and hence profitability coming through. So these are some of the reasons and perhaps some challenges that Nestle will have to deal with. That said, in terms of return ratios, well, it's right out there with a lot of its peers at around 40%, well over 40% for both return on equity as well as return on capital. Price to earnings on a forward-looking basis at around 55 times. Yes, it is expensive, but that has been the case for the entire FMCG pack. And of course, price to book value, again, not too much to speak for, still expensive, but largely in line with the rest of the industry. So that's something which Nestle has to deal with for now in terms of valuations. But, after taking account all these challenges, 63% of the analysts on the Bloomberg consensus still have a buy rating. Even though its price target, that the consensus price target is largely around the same levels, we still have a lot of analysts who are bullish. Well, we're going to have to wait and watch whether or not, considering valuations, do these analysts cut their price targets, or in that case, does Nestle go ahead and re-rate? That's something that we're going to have to wait and watch on.
Agam, thanks for that. Very interesting. That's called a show of strength after a crisis in 2015. Let's move into a quick break. Coming up on the other side, mutual funds with large exposure to broader markets are bearing the brunt of the market correction. Take a look on that issue after the break.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
do you have analysis paralysis, a case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Back on lunch, the headlines at this hour. Markets of the day's lows. The Nifty trades below 10,600 mark. Mid-cap index underperforms.
The central bank should stick to its inflation targeting regime and not get swayed, says former RBI Governor Raghuram Rajan.
iOS 12 introduces new features to reduce interruptions and manage screen time better. That's the Apple story.
And Starbucks chairman Howard Schultz will pass on the baton to Kevin Johnson later this year, exiting a company he built over decades.
We're off the day's lows. Agam is here to take a closer look at some of those stocks that have been moving. Agam.
Well, Harsha, we are off the day's lows. However, there is some weakness, and what is a matter of concern right now is the broader market. So once again, the trend playing out where we're looking at severe cuts in the mid-cap as well as the small-cap indices, both underperforming the benchmark indices. In fact, the small-cap 100 is down by as much as 2.5%. A lot of these stocks are hitting the lower circuits of 5%, especially those which are on the radar of the SEBI. That said, when it comes to some of the other indicators such as turnover as well, once again largely average. There isn't too much to speak for when it comes to the cash market turnovers. The same for the F&O. A few sectors that we're watching out for is the Nifty Realty Index. Specifically in this case is down again another 2% and now below the mark of RSI, that is a relative strength index of around 30. So it's clearly in an oversold zone. And the other sector which has not been doing well is the Nifty Media Index. Again, largely on account of profit taking in several of counters which were doing well over the previous few sessions. So these are some of the sectors. And on the whole, we're continuing to see that weakness, considering we have seen a lot of traction around the 10,600 mark and the Nifty is below that. It is going to be crucial to see whether or not we end the day below 10,600 right now.
All right, Agam, thanks so much for that market check. The sharp correction in the broader markets this year has also hit mutual fund returns. While the mid-cap and small-cap indices have lost over 10%, there are some funds that have underperformed the benchmarks too. Jayesh Khilnani standing by with a closer look at the three worst performers. Jayesh.
So, Ira, while the broader markets have actually underperformed, but the worst performing mutual fund is in fact an equity large cap fund, which is the Reliance Vision Fund. If you have a look at the performance, the Reliance Vision Fund is down about 16.5% this year so far, followed by the Sundaram Small Cap Fund, which is popularly called as the Smile Fund as well. That has given you negative return of 15.9%. And lastly, we have the DSP BlackRock Micro Cap Fund, which has declined more than 15%. So we dug a little deeper to find out which kind of stocks actually they hold and what would be their impact on the fund. If we can have a look at the Reliance Vision Fund, what is interesting is if you read the first line, the top 10 holdings of the fund that constitute for more than 60% of the fund, and most of these are large cap names ranging from State Bank of India, Tata Steel, Tata Motors, TVS Motors and Infosys to name a few, and they have weightages of about more than 6% to more than 9% each. And if you have a look at the price change column on a year-to-date basis, SBI is the best performing stock that they have, which is at down 15%. The remaining Tata Motors has declined as much as 33.6% for the year so far. Similar is the case with the other funds as well. If we can have a look, the Smile Fund from Sundaram Mutual Fund, the top 10 holdings weigh about 33.8%. But here the names are relatively, from the mid-cap space where you have Rane Holding, Navin Fluorine, V-Guard, Ashoka Buildcon and JK Cement. And have a look at the weightages. This ranges from about 3.25% to 4.67%. And the price change is relatively, much better, from down 3% to about down 17.5% for Navin Fluorine. And if we have a look at the last fund that we have, which is the DSP BlackRock Microcap Fund, in fact, it has a positive constituents as well. We'll get to that, but the top 10 holdings constitute more than 30% in the fund, and SRF, Phenolics Cables, Aarti Industries, Atul Limited, and APL Apollo Tubes, these have weightages of about 3.34% to as much as 4%. But have a look at Aarti Industries and Atul Limited. Despite giving positive returns, the stock is still one of the worst performing funds this year so far.
Okay, thank you for that. That's a list of the worst performing funds. State Bank of India and some other lenders have proposed to take over 11 power assets under the Samadhan scheme. This new plan is to keep these assets running so that the lenders can find a good buyer at a later stage. Power Minister R.K. Singh, who held a press conference earlier today, also said that the REC has made a similar proposal which is being considered by the government.
The State Bank of India and some banks had come together. They drew up a scheme called Samadhan, under which they will take over, they will try to revive some assets and get them to run. So they have selected 11 plants in the first stage under that. Apart from Samadhan, so under that what happens is that the debt is reduced, the debt burden is reduced to a manageable level. The remaining amount is converted to equity, which are held by the banks, which they will then sell off to, sell off by or bid out anybody to people who want to buy equity in those assets, and then those assets will be run. So they have selected 11 such assets. Apart from that, REC has also drawn up a project which is under consideration in our ministry. We've mentioned this to the Ministry of Finance. So after we've considered it in our ministry, we'll send it across to the Ministry of Finance. The attempt is to make sure that assets which can be salvaged are salvaged. The attempt is to make sure that assets are not sold for a song. We don't want assets, assets which are complete and, which have been constructed at the cost of, let's say, 5 crores per megawatt or 6 crores, 7 crores per megawatt. We don't want those assets to be sold off at 1 crore per megawatt or 2 crores per megawatt.
That's on the power side. The government is set to extend its welfare program to workers outside the formal economy. The move comes less than a year before the general elections. What might hold the government back from going all out, though, are limited resources and time. Vrishti Benibal of Bloomberg News joins us with details. Vrishti, what is the program and what are the hindrances?
So the government is trying to extend its social protection program to the entire population, but they are facing broadly two challenges. One is the time is limited. The government has less than 1 year to take it to parliament, get it cleared, and then roll it out. The second challenge is limited resources. Where do you get so much money to extend it to the entire population? So what the government plans to do is limit its scope initially. To begin with, they will extend it only to the very poor people in the country and start with mainly 3 social security programs, which includes life insurance, pension, and some maternity benefits. The rest can come later. And the other thing is that without waiting for the bill to be cleared in Parliament, the government wants to go ahead with the pilot projects in about 6 districts. So that is the plan at the moment.
Rishi, thank you so much for that. On World Environment Day, we spoke to a few key stakeholders across industry and government to assess the changing dynamic between economic growth and environmental sustainability. How does India fare on that list? Of the 20 most polluted cities in the world, 14 are in India, says a WHO report. Yet the UN Environment believes that the Modi government has done well, in fact has the right policies in place to clean the environment. I sat down with Eric Solheim, head of the UN Environment, and asked him how India has fared.
There is a huge shift now in India, as I see it, a historical shift. In the past, the debate in India was always, do we want to develop or do we want to take care of the environment? And then, surprise, surprise, most people wanted to develop. I will give a lot of credit to Prime Minister Modi for overcoming this debate into one debate. How can we make India clean? How can we provide electricity to all the villages and all the people? How can we make everyone affluent, but at the same time, providing jobs, creating a good environment, protecting Mother Earth?
How are you urging governments to move away from plastic, or at least regulating the use of plastic and recycling? as policy directives. And my second question to you is there growing realization among policymakers about the urgency of the situation?
Absolutely. There's good news coming in from all over the world every day. Just this morning, the Parliament of Chile has now prohibited plastic bags in Chile. Earlier this week, European Union set out a very ambitious plastic strategy. Here in India, the university board telling all the universities, please get rid of one-use plastic. Here in Maharashtra, we tried the other day to buy plastic cutlery, not because we wanted it, but we wanted to make a video where we throw it away. We couldn't get it because everyone said, no, there is no plastic cutlery in Maharashtra. Please use the metal ones.
Water bodies in India are dying or getting choked. Bangalore is a case in point where either Belandur Lake catches fire or spews out effluents. What can India learn from other countries, specifically on the aspect of managing water bodies better?
I just saw the most amazing water management I've seen in my life, and that was in China, in the central Zhejiang province. 5 years back, these were among the most polluted rivers in the world, as polluted as Indian rivers are today. Now it's absolutely clean. Neither you nor me would have any difficulty going for a swim, drinking the water. And through this process, they have brought the industry into confined areas where they take care of the waste. They open the rivers and the lakes, the wetlands. Birds are coming back, there's fish, you can go fishing, and of course it attracts a lot of tourism. This is the best practice I've ever seen. India, yes, has a huge challenge with water management in cities, but also Ganga and some of the big rivers are horribly polluted. But Prime Minister Modi has made Clean India front and center in policies. I mean, no doubt that over some time we will see also India shifting in exactly the same way which we can see in Zhejiang in China.
That's the view from the UN Environment. Meanwhile, Maharashtra has banned the production and sale of single-use plastic bags across the state. However, Jamshed Godrej, chairman of the CII Godrej Green Business Centre, believes change in consumer behavior is essential for the ban to work. I sat down with Godrej and asked him how corporate India has fared in shifting to sustainable alternatives.
I think that, it's a mixed bag. I think that many companies who are very concerned about their environmental footprint are doing a lot. At the same time, I think we have a challenge of a very large number of companies who, have difficulty in complying and in difficulty in being able to, really get onto this path. Many of them are small and medium-sized companies. But actually, in today's business environment, I think everybody, every stakeholder, whether he's an investor or a customer, really wants to know and understand, what a company is doing on their environmental footprint. And so I think, companies are really very concerned about it. And many of them, I would say a large number of them, go beyond just compliance and box ticking. I think they really look at sustainability as an opportunity.
What's been your own experience of finding sustainable alternatives? One area that most manufacturers speak about is increasing the content, or at least the percentage of recyclable material. Is that something that you've been working with? Has that worked for you?
Yes, I think that's really very important, because all industrial raw materials, either are recyclable and reusable or they're not. And I think understanding that, that in your business, what are the things that are recyclable, etc. You see, aside from the economics and benefits that you would get from recycling, I think that the social benefit that it comes to your organization, to your employees, to your customers, is very large. When you talk about such matters as how much you can recycle, what you can recycle, what is a environment stewardship as opposed to not being concerned about such issues.
In Maharashtra, there's been a ban on single-use plastics. What's been your reaction to government policy and how citizens have responded?
Yeah. So I think there are two parts for this. One is legislation and rules, etc., on use of plastic. The other is changing behavior. And both have to go hand in hand. It's not enough to just come out with a rule or a law or a regulation about plastic, because it has become so endemic for people, to buy things in a single-use shopping bag and things like that. So how are we going to change behavior? So you have to start, with shopkeepers, you have to start. So I think you need, along with legislation, you need a huge amount of outreach to explain, to provide alternatives, because it's not enough to say, don't use a bag. Okay, then what do I do? Okay, there are many countries, for instance, which charge for shopping bags, okay, on the belief that by doing that, that fund then goes into the recycling fund and things like that. But you're still then putting those plastic bags out there, you see. So I think you have to find a mix, but behavior change, I think, is the most critical part. And for this, you definitely need campaign.
Okay. The other part of the story, electric vehicles. They're touted as the next big thing for the automobile industry to reduce its carbon footprint. Tata Motors has tied up with the Maharashtra government to accelerate the adoption of electric vehicles in the state. But are there enough charging stations? I sat down with Günther Bütschek, CEO of Tata Motors, and asked him if the support infrastructure is conducive to the growth of electric vehicles.
The automobile industry is one of the leading pollutants of the environment, and you're personally leading a fairly aggressive turnaround of your firm. Given this context, what's your strategy to embrace clean energy, electric vehicles, and so on?
It almost sounds like the one doesn't go together with the other. So if you focused on the turnaround, you will not focus on the environment. For Tata Motors, I can state why we are driving the turnaround. We have a very strong focus as far as the environment is concerned. So alternative fuels as powertrain solutions across the board of our product portfolio in passenger vehicles and commercial vehicles. But it's not only valid, as I've mentioned, for passenger vehicles. We have diesel hybrid solutions where a good number of buses are running here in Mumbai as well at BKC. And we have recently won 6 out of 10 cities for electric buses, so that we currently consider ourselves pioneers in electrification of mobility in India, providing the relevant vehicles, but even more so providing e-mobility solutions beyond the pure vehicle as such.
What's your view on the support infrastructure and policy for electric vehicles is concerned? Some targets have been set for 2030 and so on. What's your assessment of that?
First of all, we very strongly support the target of the government for 2030. And very often and frequently the question gets asked, do you believe in it? From my point of view, it's not about believing in it. From my point of view, is how is this vision of the government going to be translated in a policy framework on the one and into action by the industry on the other side? And talking about industry, it's not just about the automotive sector, that we actually invest in electric mobility and that we actually provide the vehicles to the market as an attractive value proposition, because the cost of ownership of electric vehicles are anyway lower than an internal combustion engine. The other question is the private sector, to get the private sector encouraged to actually commit the investment in the development of the infrastructure. The highest or the most important hurdle of a customer to decide for an electric vehicle is range anxiety. I could actually put more batteries on it, making my products overly expensive. The right answer is we need a good density of charging stations, fast charging stations, providing the infrastructure so that customers can always be sure that if I need to charge, there's always a charging station in close proximity, and I will never ever get stranded on the road. And I think this is what we need: vision, policy attracting the private sector. We providing the vehicles, infrastructure is going to be developed hand in hand.
The interplay between business and environment. Let's move on. After more than 3 decades of running Starbucks and growing it from a tiny local chain into a global coffee giant, Howard Schultz will step down as executive chairman. Schultz's announcement triggered immediate speculation that he may consider entering politics as a Democrat and run for the White House 2 years from now. Bloomberg News' Alex Webb has this report.
There were whispers that he might run for president last time around. It seemed, and this was perhaps reflected across the Democratic ticket, that they really thought that Hillary was going to walk it, and so people just kind of cleared out of her way, and Bernie was the only one who put up any sort of meaningful resistance. I think this time around you're probably going to see a change, namely that everybody who feels they could run for president perhaps feels a moral obligation to do so. From a Starbucks side, it's also interesting. They're facing increasing headwind from the smaller coffee companies, the likes of, well, in California, this is a Californian company, Blue Bottle Coffee, which was acquired by Nestle recently. People tend to go for the smaller niche brands with a bit of cachet. Starbucks is, of course, becoming the kind of McDonald's of coffee, and so it therefore has less appeal to the millennial. There are two big players in this space. On the one hand, there's Nestle, which of course dominates the coffee space, and JAB, which is another one. They own Doughy Egberts and a bunch of others. Now, JAB owns Krispy Kreme. They also own now Pret, and a smaller brand and a Californian brand is Peet's Coffee. So these kind of small brands, which it reflects the weakening appeal of mass market brands across the board.
All right, let's move on. iOS 12, Siri shortcuts, Memojis and more. Apple's Worldwide Developers Conference showcased a wide range of upgrades for your devices. Bloomberg's Reed Stevenson reports.
This year's Worldwide Developers Conference for Apple was all about the software and not so much news about hardware. And we really saw sort of a few big themes out of Apple. The first one, and the biggest one probably right now, is the issue of privacy, essentially giving users more control over their own data. Now, this has been an Apple theme for a very long time with encrypted data on the iPhones, etc. Now we're looking at Apple giving users a little more control over sort of shared services with Facebook. The other two big themes that we did see out of the developers conference was essentially the bringing together of the iOS, iPhone software and Mac OS software. Essentially, you may at some point be able to run apps that you saw on your iPhone also on the Mac, essentially giving developers the ability to write once and then reach a much larger audience of users. And that's a feature that we've seen a little bit with Chromebooks. Now Apple is coming out with that. And the final point really was about virtual reality. Now, we haven't seen a whole lot yet, but as the phones get more functionality, virtual reality will become more of a standard feature. And Apple's building that in, as well as some tweaks to enhance the performance of the iPhones. And really, that was a little bit incremental, but really what we saw coming out of Apple just yesterday at its annual developers conference.
Out of time on that note. Thank you so much for watching us.
Countdown is up next. Thanks.